Hello friends, welcome to my channel. Now, I've been going through some press releases where I find this one very interesting by Market Watch, and it is an opinion as insider buying says a Santa Claus rally is on the way, and they are talking about 10 stocks where you can see corporate insider stepped up buying considerably when the stock market weekend. Right, so let's see what's happening over here. Now, the twin fears spooked investors, and the Omicron strain and inflation are overdone. Stocks should proceed higher as more people figure this out, leading to a Santa Claus rally later this month. Okay, so people are very hopeful, and corporate insiders confirms this view. They stepped up buying considering considerably in the market's weakness, and what's more, they are buying all the right groups: travel, retail, energy, materials are among others. These are the cyclicals that will do the best as worries about growth recede and insiders know it. Now there are lots of stocks bargain because there have been so much damage. Even if the narrow indices like S&P and Dow Jones hung through, so I think this they have hung though, propped up by few large names. And this guy have singled out 10 names favored by insiders, including several I have recently suggested in my stock advisory. Okay, now they are talking about the recent variant from South Africa. Apart from that, they okay, vaccine and all those things, I don't want to read it. Then we have inflation. So there are lots of reasons to think inflation fears are overblown, and the worry here is that Federal Reserve is behind the curve, so it will have to hike interest rate aggressively, which might kill growth and the bull market, and this is not going to happen. One sign is that commodity prices and shipping prices cost have been falling sharply, and these are the leading edge of inflation. Apart from that, next take a moment to drill down the current inflation spike. To do so, consider the Atlanta Federal Reserve's breakdown of the parts of the core CPI into flexible and sticky categories. Right now, the flexible components account for most of the headline inflation. So, this is really optimistic. Even I am reading this line in front of you, and as per this press release, everything is good. Okay, everything is good. So here we are. So apart from this, let's see what's actually making the moves. And I think two most paragraphs were important. So that's why lots of analysts and bond market investors think. Analysts expect inflation of less than 2% over the next 2 to 10 years. Quietly optimistic. Meanwhile, the 10-year inflation rate projected by the investors in the bond market stand at around 2.6%. And these projections make sense to me because companies say their supply chain issues will be fixed by around the middle of the next year. Shortages linked to supply chain issues have been a main contributor in the price spikes. So, so they have their own reasons, but I think one of the reason I have here is the demographics, and it's going to change quite drastically for US in the next decade, which we have already stepped in. So from 2021 till 2030, it's going to. And the fun fact is, this is just for the sake of information, nothing else. Now 2021, sum it up and you will get a 5. 2030, you sum it up and you will get 5. So 2 plus 0 plus 2 plus 1 is equal to 5, and 2 plus 0 plus 3 plus 0 is equal to 5. So both the years started with 5 and ending up with 5. So this is just so it just clicked in my mind. Now let's see. Companies where insiders have been buying meaningful amounts over the past several days include outdoor and retail names. So let's check it out before, you know, as per this, everything is going to sold out. So, number one, Six Flags Entertainment. Let's see what's happening in Six Flags Entertainment. So, this is what we have, and this is my standard disclaimer. Now, if you are looking at this particular stock, it is hanging by its teeth. Let me tell you this thing. You have two important levels to look at. You have $36 as your immediate support, but the way it is moving looks like it is approaching towards $31, 31.93. But do not go below $31 or 31.93 or 31 whatever. Do not go below these two levels. More specifically, below the stop loss. Don't do it. If the stock continues to sustain above $36, we are open for the upper end of the range, which will start with 52.4, then 59, and we have 72.4. But chart is looking bearish right now. This is the monthly chart. So if it sustains above 36, that's fine. If it does not, then you have your stop loss at 31.93, below which one must not carry any further trade. Number two, American Eagle Outfitters. So I think so. This is what we have as far as the long-term chart of American Eagle Outfitters. And overall, this is a positive chart, but this stock is in a consolidation for a very long time. Okay, indeed, this is a very big consolidation, and in this kind of consolidation, it's hard to tell when it's going to break out, right? So the important thing, the very important thing here is just stay inside the range. Okay, do not try to do some extraordinary things. And as far as the levels are concerned, you have 24.34, then you have 22.77. So 24.34 support level, 22.77 is your stop loss, and on the upside we have $35 as your first target, and it can stretch up to $39. That's it. After $39, if it moves beyond $39, we have to reanalyze it, because it will be a very big breakout after 13 or 15 years. So it is in a big consolidation and we have to see. So we are just looking a consolidation over here. The third one we have here is Nordstorm. Now let's go and check it out. Nordstorm. This is the price chart. Now overall price chart is uptrending, but huge amount of volatility. I mean, there is a huge amount of volatility which you can see over here, and here we are. If you are looking at the trend, you can have some big price movements, right? So this is the range we have here as far as Nostradamus is concerned, and on the downside you have 12.63, and on the upside you have a range in between 82 and 99 in the long term, and currently it is moving towards 12.63. So better be worried about the range, or at least for a better level, at least wait for a better level. Okay, so there is a pain going on, wait for it to sustain or settle down at least a particular level. Next we have American Woodmark. So this one is fine. I would say this chart looks fine. Okay, And yeah, so the thing is, if out of 5 or 10, if I find 2 or 3 comfortable, why should I go for everything, right? So as far as American Woodmark is concerned, this is the lower end of the range, and probably this is the upper end of the range here. So the levels we have here are 46.44 on the downside, and the first big range we have here is 245 and 350, and the second big range we have in between 400 and $750, and this is for the upcoming months and years. So this is a big target that we are talking about. Now, apart from after American Woodmark, we have Delta Air. Now, airlines are recently, I mean, a couple of months back, they have started moving, but there are several issues which they have gone through, and right now they are in a downside movement. So let it settle down, I would say. And for the time being, you have a range like this. Okay. So the simplest way to do things here is 32.71 is your stop loss as well as support. Don't go below 32.71, and on the upside you have 64.51, a slow and steady moving range. If it sustained at or above 32.71, then fine, then we have $64. Otherwise there is no point sticking to this particular stock. Then we have Playa Hotels. Let's go to Playa Hotels. I mean, we hardly have any data for it, but yeah, this is a flat chart. So this chart is completely flat, right? So here we are. So as far as the trend or range is concerned, you have 6.89 immediate support. You have the lower end of the range of stop loss in between 6.18 and 6.34, right? Otherwise, if this level holds, then um, we have certain levels to look on the upside, and this is what we have here, right? So on the upside, you have your first range, and it is in between 9 and 9.5. And beyond 9.5, we have 11.7 and 12.25. So this is how the chart of Playa Hotels look like. Nothing very extraordinary. Then the next stock we have here is ExxonMobil. Now, ExxonMobil is one of the slow moving stock, and if you want to stay in this particular stock, you can stay, but it will take a whole long trend, or the time consumption over here is very long, right? So what we have here, is the current range. Let me show it to you. So this is the current range we have here, where you will find your stop loss at 57.26. Do not go below this level, and if it holds above this level, we have 97 and 106 or 107 on the upside. So this is the simple range we have here as far as ExxonMobil is concerned. Now after that, we have EOG Resources. Now EOG Resources is very near to its big resistance level. So until and unless it moves beyond this level, we can't go further. So currently in a range or in a range bound move. So what we have here is 62.27 as your immediate support on the downside, and on the upside you have 118 and $136. So this is what we have here, right? Overall the trend looks fine. Okay, I think this is the second chart after I think only one stock where I find the chart looks better. Apart from this, most of the charts are either flat or is in a correction. So So that's where you can see, that's where you get to know what insiders are doing and what is the impact of it, right? So the big target we have here is 338, but the current range is in between 62 and $136. Apart from that, we have Cleveland Cliffs. So I think this is a recent listing we have here. Here we are. No, we have, this is for long term. So Cleveland Cliffs is a swinging kind of chart pattern, and currently started its correction. So if you are looking at the chart of Cleveland Cliffs, you have two big support levels for the time being. You have $16 and you have your stop loss at 11.69, right? So these are your support and stop loss level, and if it holds, then we have a big upside. So the big upside range we have here is in between 100 and $120 if it sustains above this level. So we have some big ranges, but we need to see how the stock is going to move. So finally, I think this is the last one, which is Orion Engineered Carbons. Uh, and if you are looking at this particular stock, it is going nowhere. It is literally going nowhere. I mean, if there are insider buying and stock is doing nothing, then let me first analyze this chart, then I will talk about this. Now, it doesn't matter who is buying what, but levels must hold. So for the time being, for Orion Engineer, you have 17.48 as your immediate support and $16.5 as your stop loss. And on the upside, you have a range bound move going forward. Why I'm saying this? Because 21.2 and 22.4 are going to be your big resistance level, and only after 22 or $23 we have 28 and 36. So these are conditional levels. So we are currently in a range in between 16 and a half and 22 and a half. Now what I'm about to say here is something like this. It doesn't matter who is buying what, if insider is buying or not, but this is like a experimental kind of video, which I generally don't do, but I gone through opinion or a press release where they are talking about the insider buying, or this is just an opinion. Obviously you will have a disclaimer over here. So here we are. So Michael Brush is a columnist for Market Watch, and at the time of publications, Brush owned GOOGL, and he also suggested these kind of stocks, right? And this is his Twitter ID. But the thing is, when you look at the price action, you do not see everything is hunky dory, and price moves in their own fashion or own manner. Out of 10 stocks, I find 2 or 3 whose charts are looking good. But apart from that, stocks are generally, or overall stocks are moving south, or it is going down, and it has to sustain above a particular level, after which we can say this is good or this is not good. So we have to wait and watch, and not everything where anybody is buying we have to put our eyes or ears on. We should have our sense of judgment, and this is my opinion. You do your own research and analysis, and you look something which you feel comfortable by looking at it, by understanding it, and by applying your strategies on it. So this is the end of the video. Thanks for watching.